My name is Aiden Ackerman, and this is my presentation 3. So basically, with the 401k retirement savings plan, you can contribute 19,500 a year or 26,000 a year if you're over 50. And the pros are that you can sign up with your job, and your employer can sponsor you and can match some of your contributions. There's also no income limits to this retirement plan, which is also another pro. With an IRA retirement savings plan, you can contribute 6,000 a year or 7,000 a year if you're over 50. You can sign up for an IRA at a bank, credit union, or private company. And the con is that with an IRA, you sign up on your own, so the employer cannot match your contributions. And then the pro is that for a traditional IRA, there are no income limits, but with a Roth IRA, the con is that there are income limits for your contributions. And basically, traditional 401k and IRA plans consist of money that you put in the account that has not been taxed yet. So the pro is that you don't pay taxes on the money you put into the account, but the con is that you must pay taxes on all the money that you withdraw from the account. And with Roth 401k and IRA plans, they consist of money you put into your account that has already been taxed. So the pro is that when you make withdrawals, they are tax-free and you don't have to pay taxes on your earnings, where with the traditional plan, you must pay taxes on your earnings. So for my 67th birthday, which is coming up this summer, 2021, I'm planning to retire. I created a rough budget, and my housing would be $2,000 times a monthly payment times 20 years, which is $480,000. The food would be 300 times the monthly payment times 20 years, $72,000. My transportation, which would be gas, insurance, and car payments, is 6,000 times the monthly payment times $20 a month, which is $144,000. And then my personal care, which is toiletries, house cleaning, supplies, etc., which would be $200 a month. With my monthly payment, the 12 is the amount of months in a year, obviously, times the 20 years, which would be $48,000. My personal entertainment, which would be going out, shopping, etc., $400,000 times the monthly times 20 years, which is $96,000. And then I add all of those up to get my hypothetical savings for my retirement in 2021, and I got $840,000. So then I used the calculator that was given to see. Well, I figured out that I would be 67 in 2066, and then the calculator said that I would need $2,551,839 to have the same purchasing power in 2066 that I would have with my $840,000 in 2021. So my target amount for my actual retirement would be $2,551,839. And then for the last thing, I had to figure out my monthly payment to get to this number using the FVA formula. So this was the FVA formula, and I needed to get PMT by itself. So I multiplied the inverse fraction, which is this R over C plus 1 to the C times T minus 1 divided by R over C. So I just multiplied the inverse to both sides, where I got PMT, the new formula, which would be PMT equals FVA times R over C over R over C plus 1 times, to the CT power minus 1. So then I plugged in my 2,551,839 as my FVA. And then I plugged in the rate given was 46%, and I had to convert that to a decimal, which was 0.046. We're paying it monthly, or I'm paying it monthly, so the C is 12, and the time was 30, so I put all those numbers in, and I did the calculations as followed, and then my monthly payment needed to reach my target amount would be $3,299.81.